In market news now, global stocks were mostly resilient and oil hovered near recent highs as investors stayed positive about the global economic prospects, even as data showed signs of risks. Meanwhile, the dollar hit a 3-week high against the yen as investors continued to seek clarity on the Bank of Japan's recent adjustment to its yield curve control and what that might mean for monetary policy. Locally, platinum group metals miner Royal Bafokeng Platinum swung into an interim loss after reporting a more than 2.5 billion rand fall in profit after lower PGM prices, less production, fewer sales, high inflation and the weakening of the rand. Impala Platinum announced last month that it would buy out the remaining shareholders in RB Plat before delisting it from the JSE as the next phase of its integration process begins. To give us more perspective on the markets, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thanks so much for your time. So you have this evidence that seems to suggest that some of the biggest central banks in the world might be coming to the end of their rate hiking cycle. Yet at the same time, you have this caution that's festering in coming out of China with the surprise manufacturing data, bringing some caution to the table. How are you balancing those two forms of sentiment right now?
So I think what we've seen is some risk on sentiment. I think, yes, you've had a good bounce in offshore markets, and the market has been a bit nervous around what's happening from a kind of central bank inflation perspective. But again, you've seen a good bit of risk on offshore, but that's now flowing into kind of the local market as well. So you've seen the JSE really pick its head up this last month. The rand doing really well, bonds also re-rating. And even though you have some nervousness around China, I think there is getting a little bit of interest around what's happening in China because valuations are still looking cheap there. I think investors are hoping you get a bit more of a reopening trade really starting to come through. So yes, again, a bit of nervousness around China, but still represents a very good opportunity. So I think the name of the game has been a little bit of risk on at the moment, even though there is a bit of cautiousness, and that's also evident in the fact that volumes have been very low. But a little bit of caution, but a little bit of optimism, if that makes sense.
We've just kicked off a new month. However, if you looked at the past few months or so, at least over the past 7 months, what calls were made going into 2023 that have held up, and which calls for you do you believe are still up in the air right now?
So sometimes you make a call and it's right, but it's sometimes not the way you thought it would kind of play out. So for example, the back end of last year, we were saying, look, the American market is looking cheap. We need to have a little bit of a bounce, a little bit of a re-rating. And we've got that. I just didn't think it would happen in such a concentration of stocks and be led predominantly by technology stocks. So interesting that we were right, but maybe not the way we thought we'd be. I think the one that is right and wrong, depending on where you are and which month you are at, is that SA is cheap and that it's due a bounce. And we've seen a bit of a roller coaster from the SA market. So some stages it looks like you've made a great call, some stages not so much. But again, I think we should see a really good kind of back end of the year for the South African market. The one that we're still waiting for, back to the point I made earlier, is China. I think you'll see hopefully a bit of an inflection point and a real re-rating going into the second half of this year. Even remember that they were in hard lockdown kind of November last year. So still that's got to play out and waiting for that. But I think that'll be a good trade going into the second half of this year.
How would you characterize the month of July for markets?
Back to the phrase, risk on. I think it was largely a result of better economic data. You had that CPI number in the States that surprised in a positive way. You had the Fed maybe being tiny bit less hawkish than they usually are. And indications, like you mentioned at the beginning of the interview, that we are towards the end of the rate hiking cycle in the States. So the market is starting to get a bit excited about that, looking for opportunities elsewhere. And again, you've seen that play very nicely into South African investors' hands with our bonds, our rand and our JSE all bouncing very nicely in June.
When you look at the oil price right now, given what we've seen at least over the past month, what do you think will be a big factor for the oil price?
So, I mean, the oil price has been hovering around between $70 and $80, pretty much on the back of fears around the global recession and demand not being up there. So that's kind of kept the oil price depressed. But I think what you're looking at going forward is inventory levels are very low. You've seen some production cuts coming through from places like Saudi Arabia, so that's very good from the supply side. And the demand side, you've seen maybe the rhetoric that the world isn't going to be in this giant recession and things are looking a bit more positive, and you'll see some nice demand come through. Also, back to the point around China, which is about 20% of oil demand in the world. If that really starts to kind of kick on, then you'll see quite a nice equation coming through from oil, and you could see that price pick up quite nicely. But again, a lot of things up in the air for now, and we'll kind of wait and see where it goes.
Given our environment, at least locally, are there parts of the SA economy or some companies that you believe are starting to feel the pain?
I think the biggest thing in South Africa is the consumer, right? You've got inflation higher than normal. You've got interest rates higher than normal. You've got growth suffering a little bit in the country. So it's quite a difficult place for the consumer right now. Look, hopefully we are seeing signs that we are getting towards the end of interest rate hikes in the country. Inflation is starting to kind of roll over, and hopefully growth starts to come through. You've also seen some positivity around load shedding and the like. So again, all pointing towards a better place for South Africa and a bit more positivity. So I think that'll flow nicely to the consumer, obviously also flowing nicely through into companies which have had to cost cut quite significantly on the back of all the factors I just spoke about now. So I'm feeling it all over the show, but I think the consumer definitely.
As we progress with the rest of the week, before I let you go, are there any other company news or events that you are keeping an eye on for the week?
I think the big thing is we're going into earnings season now in the States. And I think keeping an eye on what happens there and the rhetoric there is going to be a big driver, not just for the US markets, but also from a sentiment perspective flowing into places like South Africa and other emerging markets.
Martin, thank you so much for your time. That is Martin Smith, who's a portfolio manager at Anchor Capital. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.